Good evening, everybody. It's Doc here from OnTheMoneyOptions.com. This is our weekly technical analysis session. It is Monday, April 22nd, 2019, just after the market closed. One of the things that I want you to be aware of during this session is that we're very near the all-time market highs. And this is a point in time where the markets can get a little bit jittery, so you really need to be aware of what's going on and be ready to move. We'll start out by looking at the sector analysis, and one of the things that you'll notice here, this sector analysis is over the last 24 days. You see that the offensive sectors of discretionary consumer services, technology, industrials, and materials has been leading the S&P 500 for the past month. These are very offensive sectors, and this suggests that things are pretty bullish, but one of the things I want you to watch for is that they're all in the mega caps at this point in time. Looking at the number of stocks above their 200-day moving average, you'll see that we're in the low 60s, 63%, which is back in a good range. But again, remember that if we're at 63%, then there's 37% that are below their 200-day moving average. And this is looking like it's getting ripe for a nice sector rotation. This is the New York Stock Exchange Bullish Percent Indicator. This is similar to the 200, the number of stocks over the 200-day moving average. This is a point and figure chart of the about 3,500 stocks on the New York Stock Exchange. And this indicates that we've got about 62% that are on point and figure buy signals. So we've moved back to a column of X's, and this again is short-term bullish. One of the things I want you to notice about this particular chart, these are the major categories of stocks: the S&P 500, the mid caps, the small caps, and the NASDAQ. The mid caps and small caps are down very low. You'll notice that they're below the +5. And so what you're seeing is most all of the movement in the market today is taking place in the very large cap stocks. This is the advanced decline line for the New York Stock Exchange. You can see that, and these are issues today. The declining issues outnumber the rising issues by 651, but we're at a pretty good level here, close to the long-term trend line again. So from this standpoint, this sort of indicates bullishness in the market at this point in time. Here is the S&P 500 relative strength indicator. The key is the RSI chart at the very top of this screen. You can see that we're above 60. We're in a 63 range. I'd like to see it stay above here in order to remain bullish, but we have moved back from almost a 30 back at the very beginning of the year up to the 60s now. So again, this is another bullish indicator. Looking at the S&P rate of change, this is a chart I've talked about every week for the past 3 months about it being below zero. You can see it down here. We have now moved back above zero and moved into positive territory. Makes me feel a little bit better. Makes me feel a lot better, as a matter of fact. But again, we're seeing a lot of concentration in the mega cap stocks, so I want you to keep an eye on that as we go forward. This is what I was talking about. We're looking at the small caps, Russell 2000, relative to the S&P, and you can see that it's at a sort of a historically low level, at least over the past 8 or 9 years. So we're down in the 53% level, and this just doesn't look like there's a lot of risk that is being taken on in the market. Most of the big investors seem to be staying out of the small caps at this point in time. Now, moving on, looking at the S&P 500 equal weight, you can see that you see this red line crossing the blue line. This is a 50-day moving average, moving back above the 200-day moving average. That's a bullish sign, even though that we're only, in about the 1.4 range. We're still trending upward. So that means that there's broader and broader participation in the large cap in the overall S&P 500 move. This is the options equity put call ratio. The real key to this chart is the percentage price oscillator that you see here in the middle. We're neither extreme optimism or pessimism. We're kind of in the mid-range. So again, this is sort of a good indicator that we're about where we should be in terms of the big boys putting on protection. Now, switching and looking at the VIX. The VIX is very low right now. It was up a little bit today, but we're still, below 12.5, which is for the past 3 or 4 years, that seems to be on the low end of the scale. So there's not a lot of concern about something drastic happening. But what I think you're going to begin to see is more and more rotation and a lot of movement without seeing the index move a lot. I'm going to finish up this conversation tonight with looking at the S&P 500 monthly chart. When you don't know what's happening right now, you always look further and further out. One of the things that I want you to notice is that the S&P 500 monthly chart seems to signify that there's a potential head and shoulders here. So we need to really watch and make sure that this puts in new highs. And if it backs off and comes back down, we may be looking at a head and shoulders top, which may lead to some more further downside in the near future. So anyway, this is Doc. Like I say all the time, always stay hedged, trade smart, and I'll talk to you soon.